Welcome to Unconventional. I'm your host, Bill Tessar. Unique stories from entrepreneurs that have failed, picked themselves up, been knocked down, picked themselves up again, traveled roads that few travel. It's about digging into the successes that people have found in real estate, financing, lending, and the like. Welcome to today's episode of Unconventional. What does it mean to trust the process, even when the plan falls apart? What happens when doors you expect to be open don't, and life pushes you somewhere unexpected? Today's guest is someone who didn't follow a straight line to success. He rode the wave, stayed present, worked relentlessly, and built something extraordinary. He's one of the most respected legal minds in private lending and real estate finance. He's nationally recognized expert in mortgage fund formation. He's a trusted advisor to fund managers, lenders, and investors across the country. And yet, his journey started with a Craigslist ad. Please welcome Kevin Kim, partner and head of corporate securities at Fortra Law. Kevin, it's so great to have you.
Thank you for having me on. What an intro.
I always say, what I love about the intros is if somehow, like maybe next Thursday, you have me come home just before you walk through the door, 5 minutes, give me a mic, and I'll intro you to your wife and family. And they'll be like,
best hype man ever.
Right? It's unbelievable. Yeah, some of those intros for me, it's like if my wife could just hear the intro, the dinner would just be spectacular.
So much better.
Right?
So much
Hey,
better.
before we get started, we need to start.
All right. What a way to start a podcast. Look
Right?
at that.
Absolutely. And the funny part is I talked to Kevin a little bit before we got started, and I said, are you okay with a little bit of Macallan in the morning? And he goes, Bill, what are you talking about? I'm Korean. I was like, all right. I just wanted to make sure.
Champions,
I just wanted to make sure I didn't offend you.
No, for
Cheers.
sure. Cheers.
Happy New Year.
Happy New Year.
How do you say Happy New Year in Korean?
It's a long way of saying
Just
things.
say it.
새해 복 많이 받으세요. It means have a lot of luck in the new year.
Say it one more time.
새해
새해
복
복
많이 받으세요. 많이 받으세요.
that's baya sale.
많이 받으세요.
Okay.
Yeah. Cheers, man.
Cheers.
Happy
New Year. It's so much easier.
Woo.
That's Happy New Year. Like that's a
Nice
lot
and
of
short.
words.
Nice and short.
Because you're not really saying Happy New Year?
No.
Okay.
We're basically saying get rich in New Year.
Is that what it is?
Have a lot of luck.
Okay, I like it.
Cheers.
What's kind of crazy, like, how does it feel being on the other side of the mic?
I was just going to say that. This is very, very foreign to me.
Is it?
Yeah, because, I mean, we're doing an episode of Lender Lounge once a month, and then all the prep. And so, like, I'm constantly preparing for interviews. Being interviewed is strange. So, very strange.
Yeah, I know you know this, but when Old Co. went out of business, and we went through that transition, and there was all that stuff on social media and stuff, and I just stayed in the backgrounds until we came to the forefront. You were my first interview.
Oh yeah, we made it a point. Like, I gotta get a hold of it now.
That was a lot of fun. It was actually. It felt a little bit liberating, so I appreciated you giving me that forum to do that, because like holding it in so long.
Oh yeah.
Yeah, we've all had to hold things in for a long time, and and getting that out makes you feel.
And it was good. I mean, I think that you gave the industry a lot of explanations from your perspective, and it was all fair, and it was still one of our highest rated episodes, and clients really appreciated like getting clarity. And we have a lot of clients that worked with Old Co. and now work with New Co. And they're like, oh, okay, now I have the clarity as to what happened.
Yes,
so,
yeah, that was good. So what's this thing about Craigslist? Like I know that we were joking earlier that Craigslist had some negative connotations in the past, but like, so walk me through. What was that all about?
Well, so I joined the firm as a contract attorney. So what was happening was I was doing my own work. I had my own small firm, and basically working out of my garage, and I had been looking for more contract work in what I do. I do mostly corporate and finance work, and so finding those types of opportunities was kind of interesting. You wouldn't find them in traditional places. So I would find them through recruiters to do work for these big law firms. They would kind of outsource work. And a good place to find it was Craigslist, fascinatingly enough. At the time, this is back in 2012 to 14, Craigslist was decent. It was actually a good place to find.
Was LinkedIn started?
LinkedIn was around, but it wasn't
not really a big thing, right?
It was primarily Indeed, Yahoo Jobs, and this and Craigslist. It wasn't anything shady, right? The firm wasn't looking for a massage therapist. They were looking for a real lawyer. And it was basically just to do part-time contract work. And it was like very low, very simple work. When I was like, I needed the work at the time. And so it seemed like an interesting opportunity. And then it just flourished from there. It got busier and busier because I started doing that work for them, for this firm around 14-ish. And that's really when this market just blew up.
Yeah, it did.
And so I had an opportunity to come on board full time and then take over the department and just kind of kept going.
So we'll get to that in a second. So let's back up to pre-college. You were raised mom and dad, working mom and dad. Was your mom stay at home?
No.
Both of them worked.
My dad worked at in the Korean banking industry in LA his entire career. My mom
As a banker.
As a banker, yeah, he was started as a loan officer and then became head of credit for a bunch of different banks over his career. And then my mom was a small business owner, so she owned and still owns a series of Hallmark stores.
Really?
So we've been in the Hallmark business for 30 years.
Wow.
Yeah. We have a store in Lake Forest. We have a store in Whittier. We had a store in Cypress.
And is it still Hallmark where people go in to buy Hallmark cards?
Correct. So
and there's a market for that still.
Well, it's not just cards, right? So cards, ornaments, gifts, random stuffed animals. Obviously, the holidays are a busy time for us.
Sure.
Right? So collectors come in and buy ornaments, and Beanie Babies were a big thing. You know, Beanie Babies, we always joke, Beanie Babies put me through college, right? So,
Wow.
So that's my mom is still doing that. And so, yeah, they both worked growing up. And my mom got into it probably when I was around like 8 years old. So she was at home with us until I was about 8, and then she started doing that.
And did you guys work at the Hallmark stores when you were young? You did?
Oh, yeah. Starting in junior high, cashier, cardstock boy, inventory cleanup. Every Sunday we would go to do what you call kind of inventory cleanup because you have to, customers move cards around. So we have to clean up the floor and all that kind of stuff growing up.
My wife's mom recently passed away about a year ago, and she was a big Hallmark collector.
Yeah.
Over 50 years of the Hallmark Christmas ornaments, and she had an entire tree of Hallmark Christmas ornaments.
See my Christmas tree,
which passed down to my wife, who passed it down to our daughter. But there's ornaments on there that are a couple $1,000s for an ornament.
I have a vintage Barbie ornament that's probably worth about $1,000. Yeah.
Wow.
1994, 1992, or something like that.
Yeah, I'll tell you what, man, this lending legal thing gets done. You just bring the whole tree in.
If my kids don't break it, they think there's a toy, so they just play with them. I'm like, girls, that's a lot of money.
I need you. We got to swap Hallmark tree pictures if you don't mind. I want to see yours, and I want to show you the one that my wife does as well.
It's all Hallmark ornaments.
Yeah, that is a Hallmark tree. Yeah. Yes, I love that. So, do you have brothers and sisters?
I have one brother. Yeah.
And so you guys, it sounds like you guys were disciplined in terms of the hustle early on in your life, with mom and dad both working.
Hard work was probably the number one thing. Did you try your best? And why aren't you doing this when you should be doing this? And as we got older, it was like, you're sleeping too much. You need to work harder. Like my mom was a typical Asian tiger mom, if you will. So it was very busy growing up. Yeah.
Is that through the generations in the Korean side?
So,
yeah, like always hardworking. Your mom's mom and dad, their mom and dad.
Yeah,
as you think about it,
they didn't like. It's not like I don't claim to have like my parents didn't come from, like my parents came as students. My parents grew up reasonably privileged, but I think it's a cultural thing. They work very hard in Korea. Most students work very hard. All my friends, we all, like growing up, we were all, in piano lessons, martial arts lessons, math class, SAT cram school, like the usual for us was all that stuff. And it didn't seem foreign until I got to college and I met foreign friends who weren't Asian, and they're like, what?
What are you talking about? Yeah. You have a Hallmark $1,000 ornament? Can we get that and go party?
That too. But yeah, I mean, it was. I didn't think anything of it, and I actually appreciate it. I tell my wife, like, the girls are going to appreciate it as they get older because these are skills that translate to useful skills in the future.
Yeah,
like
for
piano
sure.
lessons translate to something else in the future, right? So it eventually will pay off.
Yeah, that's great. So you go to college. You went to Cal,
Yes, Cal
right?
Berkeley. Yep, yep.
So well, you got Aaron Rodgers. He's in the playoffs
Oh
right now.
yeah,
He's a
yeah,
big
yeah,
Cal guy,
yeah.
right?
Yep,
And
yep,
isn't Jared Goff?
yep.
Oh,
Jared
but Jared Goff
Goff
is not playing
and
right now.
Marshawn Lynch.
Oh wow.
Marshawn Lynch. Yeah,
Okay.
I got to hang out with him a couple times when I was in college. He used to come to the track house parties. One of my really good friends was on the track team at Cal, so
Okay.
he was a legend on campus.
My oldest son had a football offer from
Oh,
Cal, and
nice.
we had visited, but the stadium when we visited was
Yeah.
it was
When
it
I
was
was there
kind of
too,
beat.
it was very beat. It had this giant fracture down the middle.
Yeah,
It
you're
was
going like
built in the seven. No, it was like it looked like it was a college stadium from the '60s and '70s.
yeah.
It was not in good condition.
Is
They,
it?
they
Have they put
remodeled
some?
it.
Oh, they have it. We haven't
After I
been back.
graduated, I think they remodeled it in 2014 or 2015, and it's now like a professional stadium. It's
Oh, it is?
beautiful. Yeah.
Oh, I haven't seen any
Yeah,
pics of
back
that.
then, the concession, we used to volunteer in the concession stands, and they were just like these concrete slabs.
Yeah.
Now it feels like you're in a professional stadium.
Yeah, it needed it. So I'm glad that happened.
Yeah, yeah.
So when you were going through college, did you have a profession in mind of what you were thinking? Were you thinking
Pretty
banker,
much.
business owner? Were you thinking attorney?
I think it was not thinking, it was more like, hey, growing up, the expectation was doctor, lawyer, Indian chief kind of thing. Like, I'm the firstborn son of the firstborn son of the, like, there's an expectation of me.
Okay.
I didn't have like an immediate plan. I kind of wanted to get my MBA. My dad got his MBA. I kind of wanted to get my MBA. And then I gravitated towards kind of legal concepts, though. So I ended up graduating with a degree in legal studies, which is basically a pre-law program at Cal. And so, yeah, I mean,
Knowing you were going to be a lawyer?
basically by second year second year of college, I'm like, yeah, law school is probably the right move.
Okay.
I was excelling in those types of classes, and I wasn't doing so well in like math and science classes. So like, okay, this is the field I should be in. And people and advocating for students was kind of a passion of mine in college, and so law school was the obvious choice.
So you graduate Cal, then where'd you go to law school?
Loyola Law School here in
Okay.
downtown LA.
Yep, great law school.
We loved it.
Yep, my brother-in-law graduated there as well.
Yeah, great campus.
And so what is that? Is that 2-3 years there or 4
3 years, yeah, 3
Okay.
years full time. Graduated in class of '09, so not a good time to be in the job market. Hence the Craigslist ad, the future.
I mean, it's kind of like people don't realize '09, like especially on the lending side, it was
Awful.
horrible.
Well, it was just it
There's
had
just no
trickle down
bids.
effects, right? So all of my colleagues in law school, they had lost their offers. I had a plan to go work for the government that got taken away, and I had colleagues who didn't work until 2011, 12. They just couldn't find work. And
Nothing, huh?
I was lucky enough because I speak Korean, being in downtown LA. It was easy to find, friends who could, network that could help me get into something. So I took a job that not related to what I do today.
In '09.
In '09, I found a small law firm in Koreatown that was willing to take on a recent grad to do basic litigation work, and it wasn't fulfilling, but it was a job.
What is basic litigation work in Koreatown look like?
It's you name it, right? So it's all plaintiff's work. It's car accidents. It's employment litigation. It can be a slip and fall case. It can be a corporate dispute. It could be anything, right? And so it was just
All plaintiff.
all plaintiff work, small firm, and it was basically anything. At the time, in '09, we all knew because when we graduated and when we got sworn in, our dean was effectively saying, "I'm very sorry."
Was that the commencement?
It was at our commencement. He's like, "I'm sorry. Like we did not prepare you guys for how bad it is out there." And,
Wow.
and-
Was everyone in the audience going, what are you talking
Thanks,
about?
bro.
Yeah. Can we get a discount on the legal?
Exactly. So actually, the school offered, like, because of the condition of the market, they were like, LMU was gracious enough to offer like a free additional MBA program on top of our JDs in 2008. I just didn't choose to do it. I should have done it, but yeah, I mean, I hustled and found anything that paid in the legal field as an attorney job, and I don't regret doing it because it taught me basic discovery skills, basic civil procedure skills, and it
Touch a lot of people skills too.
People
When
skills.
people are saying, I had an accident and I deserve X, Y, and Z, you get to kind of figure
client
out what's
management
real and
skills.
not.
It's a crisis, right?
Yes.
So you're dealing with, and you're also having to deal with corporations and insurance adjusters. So you're learning people's skills on the fly. Which
Did
is really
you
useful.
did you know that you were Did you know that you were actually building those skills as opposed to just getting your $40 an hour and paying some bills, or were you thinking about the $40 an
It was
hour?
just pay back my student loans.
Yeah, that's what your focus was. You never thought about going to work with your pops in banking?
Well, so I had worked in the Korean banking industry before I became an attorney. So after college, I took 2 years off and I went to work as a loan officer. My dad helped me get a job at a Korean bank. Funny story was they actually made it so that nobody knew he was my dad. And he was very intentional about that because there's a lot of Kims, right? So it was easy to hide that relationship, and he looks nothing like me. And so it was easy to hide the fact that he was my dad because of the intense amount of Korean, like bank politics. And bank politics are a real thing, even in the Korean banking industry. So, he was very good about doing that. And I worked as a commercial loan officer and underwriter for 2 years. And that was really helpful because when I went to law school, I discovered that I excelled in the field of finance and corporate, and like I never got an A+ in law school, but I got an A+ in the real estate finance class. It came naturally to me. I understood what a first lien was. I understood what foreclosure was. I understood the one action rule. Like I understood what a debt service coverage ratio was. Like it was easy because I learned it at the bank, and that was.
But you didn't work alongside your pops.
No. But I learned a lot from him at dinner. So I would go to him like, Dad, I don't understand. How do you get this loan file through loan committee? I'm trying to get this approved. Everything looks solid here. The financials look easy. You're presenting it the wrong way, right? And I was like, how do I resolve this phase 1 problem? Like he would give me a lot of tips.
Wow.
And it was really useful, but at the same time, I could tell that he didn't want me doing it long term because he knew like this is not a long-term career for you because the politics, right? Because soon enough, someone's going to find out that you're my son, and it's going to be hard for you. It's going to be hard for me. It's not worth it.
It's amazing, though, right? Like you would hope that your output would be enough to support whatever you are or aren't doing, as opposed to
Unfortunately, in the Korean banking industry, it
doesn't work that way, huh?
It's like you just automatically get accused of nepotism. It doesn't really matter how well you perform, and
I think there's always that. In our company, there's an awful lot of sons and daughters and brothers and aunts and uncles. I think about it exactly the opposite. I thought about it exactly the opposite when my children were little. And they were unemployable. They were 10 and 12, but we did that with other people's uncles, aunts, sons, and daughters. To me, it's like if you know, you want to surround yourself with people you know, like, and trust. And obviously they got to be a performer. If they're not a performer, that it just doesn't really matter what the last name is. So you would obviously hope for that, but that kind of sucks. So when you saw him in the cafeteria, it was like, "Hey Tony, how you doing?
There was
hey Jim."
one point where I didn't
Tony.
work at the same bank, but there was one point where we did work at the same bank. He was at a different office.
Okay.
And so when we had, like when they would call all the loan officers in for some type of meeting, he would be on where the executives sit, and I would be where the lowly loan officers sit. and he would say intentionally, like, talk to me as if I'm just an executive. Treat me as if I'm just another executive. I don't want you to have to deal with the accusations of being nepotism baby and all that kind of. I'm like, I get that. And he didn't really help me get my job. He just literally just said, help me get the interview, and that was about it. Because I didn't have a degree in finance, but if anything, actually, like I had to prove even harder because I think the CEO that I worked for knew deep down inside that he was my dad, and so but that was only 2 years ago.
Is your dad still a banker?
My dad passed away 2 years ago.
Oh, I'm sorry.
Yeah. But
was he a banker his whole life?
He started in banking in 1987.
Yeah, all the way through.
All the way through, retired, and then came back out of retirement, and then he kind of helped stand up a loan program at some new Korean bank, and then he retired again. But yeah, all his life.
Wow.
And his dad was too. His dad was more venture capital, but he was a investment banker. So
that's oh really?
Yeah.
Wow.
Yeah, in Korea. Yeah.
So you do your $40 an hour law through Craigslist, and then how do you make the leap? And at what year was it when you made the leap into really more of how you view the legal world today?
Well, it's one of those things I always joke about. Like, it was kind of by happenstance. So when I joined this firm, it was the partner that I was working for. He was a brilliant guy. His name was Tony Patel. Brilliant guy. Harvard grad, super experienced, probably one of the best lawyers I know, but wasn't very much a people person. Was kind of much more of the technician. But
behind the scenes.
Yeah, and he lived in LA, right? And we were in Orange County, and so he would come down to the office once a week. And back then remote work wasn't a thing, right?
Right.
So we were trying to figure things out. I was learning a lot through him, and then he said he's going to retire. And so I'm like, okay, well, that's fine. I would assume that we're going to find a more senior partner to replace you. And they didn't. And they were like, well, Kevin, and the firm was small. And so we were like, what, 5-6 people back then? And so they were like, well, let's give it a shot. And so, I took it over.
So meaning you got elevated.
I got elevated, but kind of dropped into the fire at the same time because I was doing it for about a year and a half. And, I had been doing securities work before that. So like during law school and after law school, I worked at the SEC. I had done a lot of securities work on that side of the house. I understood corporate law very well. And so like, it wasn't as if I was like a first year associate, but it was, it was like I was probably in my 5th year practice and they're like, all right, let's drop you in and see what you can do. Lo and behold, the people skills, right? That really, I realized that, 90% of this is people skills.
Yeah.
And so the technician work is important, but managing people's expectations and explaining difficult concepts to them is more important than anything else.
Yeah, probably grossly overlooked by most attorneys.
Oh my goodness, yeah.
Yeah, and I agree. I mean, you're exceptional when it comes to that.
I have to teach my associates that same thing all the time. And so that really came in handy. And I struggled a lot, but kind of just keep going, and keep your head down, just keep grinding and trying to figure it out. And 12, 13 years later, here we are.
But so when they dropped you into that role, you said they dropped you into the role. Are they saying we're elevating you into this role and we're going to see what's happened?
Yeah.
See how this works out?
Yeah.
We're going to give you a period of time and see if it works for both
effectively.
you and
yeah. It was a generation goal, right? So we're going to drop you in the first year, just kind of get everything set up. And then after that, all right, here's a production goal. And I hit it, and
production meaning new business?
New business, yeah.
Okay.
So new business production goal. And then that's when I started going to shows and started going out there and meeting clients and started finding that this is where I excel, and I'm doing better on this side of the house than I am actually on what I would say the technician side of the house. And so that's when I started hiring attorneys and paralegals and growing the department. And
because you could bring the business in, you were so good at bringing the business in, you didn't really need to dig through paper by paper. You could have somebody else do that.
At the time, I was doing both, I was realizing, well, I can't keep doing this if I have my head in all the documents, buried in spreadsheets and Word files and redlining everything, and also having to go to conferences, and it didn't work. And so we started hiring, and that was when the market really boomed.
What year are we in right now?
We're in year 16.
No. What year are we in when
2016.
2016. Oh, 2016. Okay.
We're in 2016. The market is just blowing up.
Yeah.
And that's why I told you guys in the pre-interview, riding the wave, the market really took off in private lending. Before that, we were kind of all over the map a little bit. We were working with real estate guys. We were working with commercial guys.
From 12 to 16?
Yeah, we were working with random, anything that would kind of be in the world of credit or real estate. In 2015, we really tripled down in private lending. And in 16, it started paying off. And then it just kept going. And having to react and then kind of predict what we're going to need in the future and build the practice and all that kind of stuff happened starting from there.
It's amazing for my seat because I'd spent like 3 decades on the conventional side. Mm-hmm. And if you asked me anything about, it wasn't a private lending industry. There was hard money.
Yeah.
And hard money, if you go all the way back, it was like the Ames home loan with the shark that swam around that little guy in the boat trying to, borrow some money. And they called them the optometry loans, 20 points, 20% interest rate.
I mean, what is his name? Dr. Steve Pollack, right? He was an optometrist.
Yes,
and
that's right.
Anchor Loans, that's the founder of Anchor Loans.
That's right. Yeah. That's exactly right.
He started way back in, I think 30 years ago, I think.
Yeah, so, that's right. Yeah. And so from my chair, when I looked at that, I was thinking country club, hard money guys. Yeah. Kevin and Bill have some extra cash. Yeah. They put it together and they're lending seconds. Mm-hmm. And you know what? It's 50, 60% LTV. Yeah. And if the people don't pay, we'll take back the home and we'll have the equity. And it was a really simple, easy math equation.
That was the foundation of it.
But it was hard money.
Yeah.
Like no 2 cents about it. Yeah. I think when I started looking and talking to the guys at Wedgwood, about making not just a career, but a life transition out of conventional into the BPL space. Mm-hmm. I think what got me was that, like, and this is really in a paragraph, you had borrowers that had real skin in the game.
Yeah.
Now, coming from the conventional world, FHA, VA, you got,
5%.
yeah, 3.5%. You got people that, are over encumbered and they got all the protections of home ownership and
their home.
That's right. And so like, it was more of a commodity the way that I viewed it after 3 decades. And I'm looking at this space, I'm going, they have real skin in the game. There's real margins. Yes. There's real coupon. Like, there's no point, no fees. There's origination points and there's fees, and you can run a business that way, a really nice business. I was like, I remember there was probably 3 months of diligence on the Wedgwood side that I looked at. I just didn't believe the numbers because I had
every institutional player said the same thing.
I didn't believe the numbers.
It doesn't make any sense, right?
That's right.
And at the time, because it was so, I would call it provincial, the market was provincial. Like every single local market had their own type of way of doing things. Like in California, it was kind of the country club guys. In Arizona, it was a lot of the auction step guys. Same with Texas, a lot of auction step guys with cashier's checks and suitcases of money. And it was, every market was provincial. But then in 2016, that was when Anchor, Genesis, like all these big shot, Colonial, they were like really starting to make a move in the market.
Yes.
And we started saying the same thing. Holy crap. We're getting questions about, oh, I'm going to start making loans in Texas. I'm going to start making loans in Florida. I'm like, oh, really? Okay. And it wasn't just these 2 guys with a computer and a fax machine. It was, they started hiring and their funds were growing. Back then it was, everyone, the market was tiny. It was like the biggest lenders out there were doing maybe $100 million a year.
Yeah.
But at the same time, that was also when Bank of the Internet first came in. Now Access Bank doing lines of credit, and Beth, shout out to Beth. They did a securitization, and then it was like, whoa, Genesis was starting to get the conversation around the Goldman sale. Like it was starting to get attention.
Yes.
And that was really like, I was shocked because I had thought the same thing. When I joined the firm as a banker, we would have to deal with taking out hard money lenders all the time because it was commercial bridge lenders.
Yes.
And they would be in 50 LTV on a piece of land, and we would take them out. And so we interfaced with them all the time, and it was always country club guys.
Yes.
So it was just fascinating to see.
Yeah. So when we made that transition over, that was late 2016. I think I started full speed ahead in 2017. Today, now you go almost 9 years. You look. I think it's one of the most valuable asset classes in all of Wall Street. There is and you know this. I know you know this. There is a tsunami wave of capital coming into our space, working their way in. I actually think there's more capital than opportunity.
You're 100% right. I mean, the sentiment from last year was there's too much capital, not enough deals right now, and it's more likely because you have this commoditization of the RTL product, and that's creating its own type of weird, almost like the country club versus the institutional arrangement in the market. So you have this almost qualifying product and non-qualifying product in our own industry.
Yes, you do. Yeah, well said. Well said.
It's becoming very interesting because of all the institutional capital coming, which is great because it gives us legitimacy. I mean, I just sat down with a gentleman who's writing a paper for the Urban Institute and trying to get the Washington, D.C. types to understand our market finally. And he's a former Fannie guy. And so that tells you that, okay, I think in the next few years, we might start seeing some, not just Wall Street attention, but the government might start recognizing that we are an actual way to provide housing stock.
Yes.
They haven't understood that.
No, they haven't.
And so that's one of the things that is exciting, but at the same time kind of scary, because does that also mean that comes with regulation? More regulation. We're surprisingly unregulated in our industry.
The whole business purpose
correct
really protects
it makes
that
our life
part.
a lot easier because we're commercial.
Yes,
but,
for sure.
So there's a lot of interesting developments in our market as where we're headed as an industry. But at the same time, who knows? I mean, I've always been cautiously optimistic because we've seen Wall Street also get so scared so easily. Not just Wall Street, the banks, they get scared really easily.
Yes.
And so when this recent fraud scandal with some of the big banks happened, the whole Shangri-La deal,
Yep.
and Western Alliance issues, like we were worried that is that going to have downstream, like another First Republic situation? Are they going to freeze? Are they going to leave folks at the altar? Is that going to have effects on Wall Street? Are they going to suddenly, like, so
I think from my seat, there's always been those guys and gals. There's always been that pocket of people that are going to try to figure out a way to beat the system, and we call it fraud, and that does have an impact. The whole the Luger gold thing that was big. Heard a lot of people that are in our space with a lot of exposure out there. But I also think it's those things that allow us to be a better version of ourselves. If you think about the industry, when I got my first loan, it was a 2-page 1003 and 3 pages of disclosures in the 80s. Now it's like this, right? And the reason it's like this, Kevin, is because of all this crap that you and I are talking about today. For the last 35, 40 years, more and more. Oh, that happened? We need to disclose there. That happened? We need a fraud guard against that. That happened? We need to, triple vendor check that thing. And so, I mean, that is kind of the genesis of what our industry has become. People commit fraud, they find ways. And like, look, it exists right now. One of the things, I think I shared this with you a short while ago, and I think it's very important. I've heard about some of the folks trying to do it back east, but creating a safe place for originators to share information on the bad characters. Like we have a DNL list, a do not lend list.
Oh, sure.
For us.
Yeah.
But we don't like hand that to our top 5 competitors, and they don't hand them to us. And then you'll see those people getting financing other places where you'd want to pick up the phone and say, hey, Bob, you probably shouldn't be lending to Bill because this is what has happened. We need that. We don't have a universal setup like that where people can plug into. And I know Nima said you guys had thought about.
Well, there's you have to think about the downstream effects of that in general. So Nima, to his credit, has started this forum for general counsel, and one of the hot topics was this issue. And one of the downstream effects of this is like, well, couldn't this actually be used in a very strange way where it could actually work against lenders by having this person on the list, and opportunistic guys could intentionally place people on that list and have a chilling effect on other lenders' activities just to mess with them.
I see.
So the idea, and also
could you imagine somebody going to that?
That's how competitive our market has become. I mean, you've heard stories of lenders reporting their competitors to the local licensing regulator and stuff like that. So I don't put it beyond people in our market. I mean, you have lenders that got caught double assigning loans, and so like it's an interesting market because at the middle and lower tiers, you see people who are willing to do bad things. I've actually we debated this with the executive team at AAPL about like what do we want to do about this, and I think one of the smart ways to do it is provide resources and education, share ideas, and share those things, but not necessarily create a list, like a uniform list that everyone can go to, like a directory, because also like what qualify if you don't have specific and actionable definitions.
That's the problem right there, and you could be liable if I say Bill Tessar is he's a guy we won't lend to.
That's libel. I mean, that's defamation. So you don't want to do that.
That's what I always thought the big block was.
And that's also one of the major blocks. But if you think about it, it's also like frankly you don't know all the facts behind that quote unquote fraud, and so it's unfair to the originator and to the broker. If the story is not fully fleshed out and automatically gets blackballed, that kind of sucks for him too. And frankly, I kind of think it's a little bit un-American in the idea of like, we are in a free market society. If something goes wrong, and I always said that lenders, like this whole fraud thing, I've always wondered like, okay, I understand that the vendor committed fraud. And I understand that the broker hid the fact and committed fraud. But also like lender, if you're just passing the buck on to those people and you're not taking accountability for your failures on the underwrite.
Of course.
You have to be willing to say, hey, look inward and like, wait, where did we F up?
Oh, yeah.
And so
do your postmortem and
oh my goodness,
of course.
But the reaction was, no, let's blame the brokers. Let's blame the vendors. I'm like, I get that.
Yeah, it starts with you.
It starts with you.
Yes.
And so how are you reacting to this situation? Because I haven't said it on shows this public. I've said it on panels. Like, if you talk to the guys that had local foot boots on the ground in Baltimore when Baltimore happened,
Yep.
they were laughing because they know that block would never appraise at that price. And I'm not saying that you have to have boots on the ground, but there has to be some kind of gut check where you can have that local intelligence and maybe not just take one appraisal, but maybe have a internal means of verifying that. There has to be something better than just saying.
And to make sure it's not the same owner on all the appraisals that are creating the values.
Look through everything.
Right.
It's not hard.
Yeah, it's very easy.
And they're all licensed, so you can kind of tell who owns what. But if you're just taking the check the box because of speed and volume and the desire for that, then that's also, you have to look inward.
Yeah.
And I think our industry tends to, they're focused on production, and they don't want to take accountability for maybe we did screw up here.
Yeah.
And so that's also an important reason. That's why AAPL hasn't been so intense about we don't want to just create this list just to create the list.
Yep.
If we're going to create resources, we want to do it in a very meaningful way where it's not going to be that defamation problem. It's not going to be that, we don't have the full story. If we don't have the full story, how can we do it?
You're telling me all the noise in my head as to why this can't happen.
Exactly.
I haven't heard anyone tell me the reason why it can happen.
Yeah.
I subscribe to your thought process.
And I think
it's
the
too bad.
smart lenders are figuring it out.
Yeah.
And even the ones that got burned, they are figuring it out.
Sure.
And like you said, there's going to be a reaction to bad things happening, and we will improve our systems and processes, and the market will be better for it.
Yeah, the two. So you don't have that, and because nobody reports to the 3 repositories, you don't know when people are going down on mortgages. You know, and I know. If you have a mortgage on your home, no matter what, Kevin, and forget the fact that your dad was a banker and you come from a very disciplined family. No matter what, you're not going to miss a mortgage payment. Because you miss a mortgage payment, it impacts your TransUnion, your Equifax, your Experian, and it drives that score down, and you can't borrow anything anywhere else.
Yeah.
But in our space, no one reports, including us. We don't report. And so you also have a lot of strategic default, meaning someone's completed a project, they're in escrow on a 90-day sale, and they just stop making payments. They'll pay the default interest out of the proceeds. Yeah. But they would never do that if you were reporting. So you got a bunch of noise there too.
That is important. I think if you had some type of meaningful way to do that, it's unfortunately you have to balance the downstream effects and the negative ramifications of making that choice.
Yeah.
But I always tell people who are like, well, why can't we? They do it in conventional. Well, hold on, if we were to analogize to conventional, that makes sense because we're touching houses. But our friends in commercial have been dealing with this problem for decades.
That's right.
That industry's been around for 40, 50 years.
That's right. It's a great response.
So how do they deal with it? And a lot of it has to do with, if you talk to the commercial shops that have been around for a long time, they don't just do one valuation. They don't just use one. They have a trusted list of vendors. They have a trusted list of brokers, and they have a very thorough means of vetting a broker. And the ones that don't will get burned.
Yes.
And they do share information because they are also very involved with each other. They're all friends with each other. And I think that's one of the things that our market needs to be a little better about is that we need to have opportunities for the CEOs to communicate with each other. Hey, you might want to tell your guys about these situations. In California, actually, when that Honshu case happened, the local trade association in the hard money world, they had all dealt with that guy before. And so it was kind of oh yeah, we don't lend to that guy.
Yeah.
And they all knew about it, and they all kind of and a lot of the old heads, they have breakfast together every quarter. So, that's something that I think is probably a better way to go about it. But that the dynamism of our sector is so hard to manage that with.
It is, and it is interesting. You have a few folks that are friendly. You don't have a lot of folks that are friends that run these companies.
Yeah.
Friendly and friends are two totally different things. That's
probably the virtue of the downside of being in the SFR market because we're working on volume.
Yeah.
And whereas in the commercial market, you're not as much.
Yeah, you got to get that one deal.
Yeah, and that makes it hard.
One of the things that I think is so special about you, so special is, and I tease you about it a little bit, is I have a tendency to forget you're an attorney. And because what you did, you mentioned it earlier. You said, I would go to conferences and I would drum up business and then I'd bring it back to our firm and then we would have cases to work. And I was pretty good at it. And so I had to get more attorneys to help me with that. but you've actually created a marketplace in our conferences, which is a trusted marketplace. No, like best of class. And I know this, having talked with Nima quite a bit, that it was never a P&L angle, even though it's always nice to make money.
Yeah.
But it really is, it's created this trusted source for you where when your name and your company's name gets brought up in our space, it is that of admiration and trust. And it is really, I believe, I don't know if you like it or not, but I believe it's because of that community you've created in the conferences. It's been unbelievable, Kevin. I've never seen anything like it in all my years of working, how you guys created a different mousetrap that actually really works and makes sense.
I mean, I can't take credit for all of it. I would say, shout out goes to Ruby and getting the execution done and the thought process behind that community building, because both her and I have been working on these conferences together for too long. And, Nima and I took a much more active role in how the conferences should be run way back when and got more disciplined about it. And we were thinking like, well, this is a branding opportunity for us. It's not a money-making opportunity. But at the same time, we are both of the mind, we've always been of the mind that kind of the rising tide, rises all ships. But at the same time, we also want to be inclusive of everybody. We don't have the idea of like, oh yeah, well, we don't work with those kind of lenders, or we don't work with, like, we want to work with everybody in private lending, whether you're small or you're large, or it doesn't matter. And I pride myself on helping the brand new guy. And so that goes to the community building. We've always had that inclusive mentality when it comes to industry professionals, and we really want to help, someone become the next CB3, right? And so, but it doesn't come without, a lot of the, I would say, personal touch mentality, and credit goes to Ruby. Ruby touches every single sponsor, touches every single attendee. She really puts a lot of thought into it, and her team behind her. I mean, shout out to Casey. She's like the most famous person behind the scenes when it comes to everything that we're doing on the marketing side.
Yeah, I appreciate you giving them calls. Ruby finally kind of showed her face a little bit recently because she hadn't for a long time.
She doesn't like doing public speaking,
but I'm glad she did, because she does get a lot of credit, and they are fabulous. Our marketing team loves working with your group, but it's because you're pros. And you know what? Look, there's another law firm on the East Coast that has copied what you guys have done, and so that is a compliment.
Yeah, and
it's a great compliment that you guys are doing it
John's
right.
doing great things too.
Yes,
I give them a lot of credit.
Of course, but I do think like it tells you that something's working, because you would never think ever running a law firm that getting into the conference business would help your law firm. You just wouldn't think of it that way.
I was
normal and customary.
I questioned it too, and what I noticed was it was the community building. It wasn't really about like, what was it? The sponsors and the body. Like it's not about the money. It's about getting as many people who are clients. Also, it was a really good reason to see our clients. I always believe that face-to-face time with a client is more meaningful than any. You can have 100 phone calls. An hour face-to-face is worth 100 phone calls, right? So that was also the rationale behind it. But part of it also was with the support we got through our association with the APL. Like, they were so supportive, and they have a huge community, and so working together with them, that was the hard part. It was like the first. I was like, are we gonna rub them the wrong way? Is Linda gonna get upset about this? And she was so supportive, and so that allowed us to further build on that community, and we partner with them in so many different ways now, and we're the general counsel and all that stuff. So it's been very, very helpful using their resources and helping them as well. So we get the kind of synergistic help in building this larger community.
How many conferences are you guys doing?
We just do 2. Yeah.
2?
Yeah.
And what are the dates on those?
Yeah, so we have one coming up, March 30th, 31st in Las Vegas, and then we have one in the summertime in August in Newport Beach. Yeah.
It feels like there's more than that. It's really just
we have
2?
Conference fatigue. Yeah, everyone. There's so many shows now.
I know.
Yeah, and that
but
goes
yours is 2.
Yeah, I mean, we got disciplined about it. We're like, you know what? We don't want to overdo it. There's a lot of conferences out there. There's a lot of opportunity out there. We don't want to put too much out there. I think 2 a year. We've even floated the idea of 1 a year.
The Vegas is your big one, right?
They get actually they're
Your
kind
port's
of the
gotten
same now.
bigger.
They're both about the same size.
Yeah.
Ruby likes to pick, and I like to pick as well, like places that people really enjoy going to.
People like to go to Vegas. They like
well,
that.
so we don't want to go to a hotel where it's like, just like it's just Vegas. We used to go to the Encore, and now we're going back to the Cosmopolitan. We want to go to
You guys do such a nice job.
we want to put on a good show for people to experience, but that also just fosters the community building. And I think the part of it also has to do with how tight we are as an industry. It's a very niche industry. It's a very strict, strange subset of the mortgage market, and the firm is double, triple down in that industry. So how else are we going to get that group of people together? And the conferences really help, but we wouldn't be able to do it without our friends at AAPL, our client support, your support, and that kind of stuff. Because we're just lawyers, right? So it's not just what we're able to do. It's partnership with all the other sponsors that support us, and that's really important too.
This is a dumb question, but I probably shouldn't ask it, but I'm going to ask it anyways. Does the math work? Have you ever sat back and go, okay, we're going to put in 740 man hours here. We're going to break even, lose a little money, make a little money.
Yeah.
But we maintained 37 relationships. We got 13 new ones from the conference. We lost 2. Has anyone ever sat back and just done the math? Or are you guys now such a staple in our space that you're going to do it whether you get a client or you don't get a client?
It's kind of both. We balance it. We're not in the business to lose money, right? But we're not in it to make money either. The purpose of the conference is for the law firm is to really provide branding support, and so whether we get a client immediately is not the measurement.
Yeah.
But at the same time, if we're starting to lose market share, if we're starting to like at a law firm and client representation, if we're starting to lose, we haven't. I mean, the thing is the math.
You guys have grown crazy.
Well, yeah, so the growth, and we can't put a pin in one particular thing, but we think it's a collective participation. We don't say that the conferences are not productive, even though the firm is growing, right? So that, along with all the other things that we do, are all there to help support the firm's reputation and brand. And I think that that's been proven by the firm's growth. Now, to be truthful, there is kind of a question mark that we're asking ourselves, like, okay, have we hit kind of a plateau? And that goes to the whole thing about there's so many conferences out there, and how are we going to set ourselves apart as an organization to continue to build more community and provide resources, and also convince them to use us as a law firm. And so that goes to kind of new ventures that we're pursuing, like the GC Forum that Nima's doing, and I'm going to be doing a lot more personal roadshows over the year, because once again, the face-to-face time is so meaningful for a lot of clients. They really appreciate it when you come down and pay them a visit. And so there has to be this continuous thought process about, is what we're doing effective? But at the same time, we're not going to get rid of it just because we're starting to see a plateau, because
that could be from some other. It
could be a product of just the market conditions. We think it is. At the same time, we are always critical of the conference. We always do a start, stop, continue on every conference. Okay, what needs to go? What needs to change? We pivoted this past few years, adding more education, because we've been getting a lot more demand for that. We used to do a lot of education. We got rid of it. We started adding more of it. And so, it's always evolving.
It's interesting. So we have, I don't know if I have the right number, but I think it's, Tessa will nod her head up or down, but I think it's like 12 or 14 people overall marketing and digital and stuff. Is that about right? Ish. It's a little bit less than that, she's telling me. And that department, at the end of the year, what we do is we take a look at all of our conferences. And it's a group of the head of retail, head of wholesale, some of our other VPs, and then myself and some folks in marketing. We look at all the conferences nationally that we do. And we spend a couple $1 million in conferences, throughout the United States, to determine what we're going to do the next year. Yep. And then what I would tell you is the conferences that you guys put on, they are quick circles. Like there's some you have to look at. Okay, does it make sense for us to travel with 14 people to Texas and flights and all this stuff to have a booth for 2 days with this many people coming through, and what's the message and what's the whole thing about? And so we go through it, but every single year that I've been at the helm, both old co and new co, your conferences have been circled quick. And so to me, I think that is a reflection on you delivering what you promise, which is really a product that people can feel good about investing in.
Oh, thank you.
Right?
Yeah.
Like, because
That means
there's no other reason we don't have stock in your company.
Right.
And quite frankly, we never used Lightning docs at Oldco. We had a whole other doc relationship, and it was, I think, the relationships that came out of that that forced us to have a conversation with Nima. And I think we're doing 500 or 600 sets of docs a month.
Yeah.
So like that came from that.
Right.
So I do think it works.
I'm glad you say that, right? Because it's one of those things where like we don't know what we don't know. So when we all we can do is when clients come back to sponsor, when clients come back, and we hope they give us feedback, right? So we want to add that always. So Ruby's always looking for feedback. I'm always looking for feedback. How can we improve next year? And so we want to make sure that the sponsors get as much value as possible. The new market entrants that attend get as much value as possible, and there's a lot of connectivity there, so that's important for them. But also, I want them to walk away feeling like, okay, that was beneficial because I was away from my desk. I could be producing. That was productive.
Yeah,
that's something that we're really focused on.
It's a good question, right?
Yeah,
and
you're
you want to
spending money to be in whatever hotel room, flight. You're not at your desk. You could be getting work done. So that it has to be productive for you. And that's one of the things that we really strive for. And I think that's paid dividends for us because they see how hard the team works on putting on that kind of event. And so, but we're never going to sit on our laurels about it. If it's not working, we're going to change it. If it's too much, we're going to pull back on it. We're always going to make adjustments.
So getting into the legal side of your business, so Fortra came to the marketplace. Really, it kind of like the way I think about CV3. It's always been in the marketplace. It's same good folks, new name.
Yep.
It's a lot bigger than I thought it was. I think if you told me, I'm going to give you $100 if you can come within a few people, how many folks we have in our firm, I would have told you Fortra was 15, 20 people strong.
Yeah. It was way back in the day.
How many people do you have in Fortra today?
If you include all of our staff, including our offshore staff, we have about 85 people.
85 people.
And that's not including the Lightning Docs team. So if you include the Lightning Docs team, they're a separate company now. So if you incorporate them, we're about 100. Yeah.
That's crazy.
Yeah.
I mean, that's really, really big.
Yeah, I mean it's a huge group now, and we're managing both offshore and onshore, and remote employees and like local employees, and it's been cool. It doesn't feel that big, strangely enough. It's the teams are like my team is. We had team meeting yesterday. I kind of look back. I'm like, holy crap! When you have the teams meeting, it's getting kind of full.
Yeah.
So it's like, and it's been cool to see. But at the same time, we have defined working groups, and so that keeps things kind of small and nicely tight knit. But yeah, I give credit where credit's due. It's, our marketing teams helped a lot. Our executive teams helped a lot. It's also the market really needs the support, and we're a law firm, so we have to have people doing the work. Mm-hmm. And so, we've been able to attract some pretty good talent over the years.
Where is your focus today? Like, if let's put conferences aside. Yeah. Let's Lender Lounge. You've made that certainly a very popular podcast. But you also practice law.
Yes.
So walk me through what takes up most of your day.
Yeah.
As it relates to the
majority of my day is still practicing law, doing consultations with both clients and prospective clients. And they're mostly thinking about, okay, I'm trying to build my private lending business, so new market entries, or I'm trying to expand my business and that goes to capital strategy. So it's not just fund formation, which is actually the main thing I get called for, but at the same time, it's strategy. So it's like, it's not just the fund, but it's incorporating that fund into the business at large. And then beyond all that, it's client management. So it's kind of 60% that, and then kind of 10% client management. So if client has an inquiry, has a strategy question, has a random question that my team can't answer, that's that. And then there's a little bit of kind of operational, administrative, executive work, that firm-wide work that I do. That's going to change in this new year. I would say my goal is to get that down to 50%, and then 50% of it is going to be outward-facing firm stuff, executive stuff, because the firm really needs a lot more of that. And we've decided that Nima is going to concentrate more on lightning docs.
Yep.
Because it's a growing venture for us, and so the firm needs someone at the helm. Individually, for a while it was kind of like squishy. Nima, me, Melissa, kind of squishy. And then going forward is at least outward-facing wise, I'm gonna take more of an active role.
So, would you say you spend as much time on private fund formation as you would on the more traditional warehouse lines, mezz financing, and more typical Wall Street type of deals?
I mean, so most of my work is revolving around getting those funds stood up on the legal side, and then also random corporate work that includes their mortgage licensing, that includes their, if the client is bringing on a new partner, whatever. And my practice group also works a little bit in the real estate world. So we work with like developers and syndicators in the real estate world as well. So we do the same kind of work for them. And then when it comes to like lines of credit and working with the secondary market and those kind of things, my job is actually more outward facing. I'm really more of like, okay, client, here's what you should think about if you're trying to start integrating with them. Here's where how it works in your business, like which entity needs to interface with them, what licenses you need. And then when the MLPA comes in, my partner Melissa, her team actually negotiates those.
Okay.
Yeah. So we work kind of hand in hand in that. I'm really more of the strategist and advisory component, because the client oftentimes doesn't know where to put that relationship in the business. They have opco, they have fund co, they have servicing co. Where do I put this?
Yep.
And so, and how do I flow the funds? And so those kind of strategy questions I typically answer, and a lot of it has to do with regulatory, because if you're in California, especially, like the rules here are so strict, and so we're having to navigate that with those relationships, and then at the same time, that allows us to play introducer, right? So I do a lot of introducing, and so I send folks over to your wholesale team, and we send people over to different shops because they're clients as well, and so we can, if we're able to help them grow by leveraging our Rolodex of relationships on the smaller side, that benefits them as well.
Yeah, for sure. Do you see many outfits out there that specialize in both the traditional form of lending on the warehouse side and have a fund inside of underneath their
When you say
umbrella?
traditional, are you saying like they use,
Like warehouse lines, mezz, the bulk fund, pass through securitizations, and then there's some
bulk of
lenders
my
that only do
clients-
fund.
Yeah, the bulk of my clients have. Well, okay, so I kind of split them in two camps. I've got the clients that have already gotten there, and I have clients that are getting there. Right,
Yeah.
The guys that have gotten there, most of them do have a fund. That's why they're working with me.
Yep.
The fund is reasonably sized, but they also have, the fund has a line of credit. They may have a separate line of credit on their opco. They sell to the secondary. They
Yep.
wholesale DSCR.
They have both.
They do all of it, right?
Yep.
The smaller guys, the guys who are getting there, I would say half of those guys start from the world of, we've been corresponding and table funding, and we need to expand our footprint. We need to diversify our capital strategy. We need some discretionary capital, and we'll try to get them to that blueprint.
Yeah.
So yes, fund is going to be involved in that.
Of course,
some kind of capital raise. But we do have a small subset of clients that are just purely, and they're really more of our licensing clients. They are exclusively following what I would call the mortgage banking model, which is what you're calling traditional. And yeah, I mean it's just they have warehouse lines, they have usually some type of mezzanine or subordinate financing, and they have some kind of capital relationship. And we're doing, a lot of those guys come from the conventional or non-QM world.
Yep.
And we're adding licenses to their desk for this business. We're adding compliance, sometimes some capital advisory, but that's really, so it's a mix.
Do you feel like there's an optimal fund size where people operate most efficiently?
Yeah.
We talked a little bit about that earlier.
Yeah.
Is it 100 million? Is it $1 billion? Do you feel like once they go over a certain number, you introduce more scrutiny, more risk, other than the fact that you got to keep it filled and you have certain,
I think it used to be 150 million was kind of the number. Now I would say probably close to like aggregate funds, kind of around 300, 350. But that's on the equity cap table on the fund. And then you've got layers to that, right? So
Right, like whether they're levering it or, you know.
Levering it. How are they selling to the secondary?
Are they selling to the secondary?
Yeah.
There's some big funds out there
They
that
balance
we face off that balance everything.
Yeah.
And some of those guys, like when you face off to them, you're just not going to beat. You don't want to beat that bid because it's so low.
Yeah.
And so you just tip
Especially
your hat.
here in California.
Yeah, for sure.
And then you also have clients that have multiple funds. And I recommend that. You know, clients have, you know, kind of core fund, and they have the opportunistic fund for the riskier stuff. And then they also have, or the distressed stuff. And then they layer in, you know, they sell some liquidity off the secondary. They have leverage. That's kind of the blueprint that I recommend.
Yeah, I agree with you on that.
Yeah, so around 350, 500 is kind of where I would like to see most clients in the long term, to be kind of like, okay, you're stabilized. You are a going concern business with a real outfit and real employees and real. But honestly, I would say if the question is more like, you can do serious damage now, you can really play in the space. You can do that with $50 million. With $50 million fund, you know, moderate leverage, you can be a serious contender now. Because there's so much capital out there. So if you interact with the secondary with that $50 million fund and that leverage, you can be a serious player. And there's a lender out in Boston. She's a serious player, and her equity cap table is on the smaller side because she's able to leverage the secondary market.
So let's switch to more personal management. You do a SWOT analysis?
Oh yeah.
Do you do that personally or do you do that professionally?
So I do a SWOT analysis on myself kind of once a quarter professionally. Personally, this is where I tell my wife I love her. She's my personal SWOT analysis. Right?
She'll let you know?
She'll let me know.
She'll let you know about your weaknesses.
There are times where, like, you're being really grumpy and cranky. You need to go to a conference and come back because you need a reset. And it's like, or you need to go out and hit some balls at the golf range, or you need to go shoot some guns with your brother. Like, you need to go do something to. She's my personal SWOT analysis.
Okay, I like that.
But professionally, I do it every quarter, and it's both the business, but also like how I'm interacting with the clients. What's working well, what isn't. Was that sales tactic? Was that pitch? Was that presentation good? And that kind of stuff. And I do that just kind of at home privately. We do one at the firm every quarter, and then annually. And we have to, because the market is changing so damn fast.
It is.
We have to make sure we stay on top of that.
Yeah, you know, and sometimes it's tough to just have to realize those areas that you might not be as good
I get
at
so
that you think
defensive
you
with
are.
my wife. What? I'm not grumpy. And then
I know. That's great. What about, you ever do a keep, stop, start?
Yeah, and that goes with the SWOT, because you have to. We call it start, stop, continue. And personally, it's a lot harder because a lot of it is, the stop is typically stuff that I really like to do. But it's a time killer, but that was one of the big ones. Was I told you my dad passed a couple years ago. We did a big SWOT, my wife and I was like, "What? Something needs to change." And so the big thing for me was get in the gym, because my dad never worked out a day in his life. He just played golf. He played golf.
Was he a good golfer?
He was. Yeah, he was a 2 for a while.
Wow.
Yeah. And so I've always looked up to him for that. But the whole working out thing and getting in the habit of working out, and I've always admired Nima for that. He always was a 5 a.m. guy and go to the gym. And so I started doing that after he passed, just to correct some
and
bad
feeling
choices.
better.
Feeling a lot better.
How's your golf game?
Terrible. I'm like a 25.
I my joke is, if God could give me a single digit handicap, I would wire him $250,000 tomorrow.
And what makes it hard is now golf is booming right now, and so
great.
So Melissa, my partner, shout out to Melissa. She started playing golf. My associate Carter, I think he's just like a 7 or an 8. He's fantastic, and our industry friends, they all play, and so it's like, I caught the bug recently again.
Yeah, I got it
not
too.
playing for about 12 years because I had little small child
Yes.
how to play golf.
Yes.
Now they're older, so I can play a little bit of golf here and there. Thankfully, there's some golf tournaments in the industry. So,
well, I'm a member at Rolling Hills out here. So next time you're out in the area, just give me a couple day notice. We'll set up a time and we'll get you out there.
I appreciate that. Yeah.
Any as we wrap up, any New Year's resolutions? Do you have one?
Yeah, I mean, the big one is to lose 10 pounds. So the gym, right? So I dropped 15, dropped another 10. I need to drop another 10. Yeah.
Yeah, I was a little irritated, to be honest with you. I got here and we were getting set up for this podcast, and one of my right-hand people told me, "You look real large in the camera." And I'm looking at the camera going like I'm checking myself out. I kind of felt decent in the morning waking up. And so they literally pushed my chair back so the camera distance between me and my large body looked less large. So maybe I think I'm going to run with you, Kevin, and drop 10 next. So you said March. Go home today.
Yeah.
Weigh yourself.
Yep.
I'll do the same. And then we'll just have 10 pounds, and we'll celebrate with another whiskey.
By the conference, I want to drop another 10 pounds.
Okay, so together, we're in that together.
Let's do it.
If people need to get a hold of you, Kevin, where do they go?
Yeah, I mean, our website is probably the best place, fortralaw.com. You can email me. Email is probably the best way to get a hold of me. I'm always on my phone.
And what's that email?
k.kim@fortralaw.com. And you can also just find me on the Googles and the YouTubes, and Lender Lounge is on YouTube and it's on Spotify. So you can find us that way as well.
Yeah, if you haven't watched this podcast on Lender Lounge, go back there. I mean, they're
our highest rated guests right here.
Let's go. I was a little bit leaner there. What they did then when they filmed me, I was like 3 blocks away, and then they just kind of. It's a pleasure. Keep doing the wonderful things you do for our industry. Grateful for you, and the whole industry is grateful for you. And God bless you, Kevin.
God bless you as well. Thank you very much for having me.
Every story reminds us that being unconventional isn't just about business. It's about people, purpose, and possibility. At CV3, that's what drives us every day, to think differently, to lead by example, and to help others thrive. Follow us on social at CV3 Financial and see how we're redefining what it means to do things differently in real estate investing and beyond. Go be unconventional.